Second Crypto Revolution. Build generational wealth with Richard Hart's crypto ecosystem. Chapter 10. Tax Optimization. And we begin with a quote from Murray N. Rothbard. Taxation is theft, purely and simply, even though it is theft on a grand and colossal scale which no acknowledged criminals could hope to match. It is a compulsory seizure of the property of the state's inhabitants or subjects. The growing popularity of cryptocurrencies has caused tax offices in many countries to take an interest in the topic. Cryptocurrency in the United States is treated like real estate and other investments, not currencies. If you hold your cryptocurrency for a minimum of 1 year after purchase, you can qualify for a rate of 0 to 20% depending on your income. Shorter investments and trading are taxed at the levels between 10 and 37%. In the UK, natural persons pay capital gains tax on their total gains above the annual tax-free allowance of £12,300. Any gains above this allowance will be taxed at 10% up to the basic tax rate if available, and 20% on gains at higher and additional tax rates. The success you may enjoy while investing into cryptocurrencies may make you start to consider moving to another country, or at least changing or obtaining additional tax residency. Here are some ideas. Portugal. Portugal was one of the best places in the world to live if you wanted to avoid paying taxes on cryptocurrencies. Cryptocurrency trading was not considered to be investment income, so it was tax-free. That was provided that you were not running a cryptocurrency company. Your digital investments were also exempt from VAT and income tax in Portugal. For the vast majority of investors, Portugal was therefore a tax-free country for cryptocurrencies. Changes are coming next year. Profits made on digital asset holdings held for less than 1 year will be taxed at a rate of 28%, while crypto held longer than that will be exempt from taxes according to the country's 2023 budget plan. Authorities will also treat gains from the issuance of cryptocurrencies and mining operations as taxable income. The new policy will effectively end Portugal's status as a crypto tax haven in Europe. Portugal still has most of the things crypto investors and startups need to flourish: an aspiring tech scene, affordable living costs, great internet connectivity, and even a visa for digital nomads. And in about 300 days of sunshine per year, plenty of surf and tax breaks for foreign residents. Puerto Rico. American residents have probably heard of Silicon Valley billionaires heading south to enjoy the luxurious Puerto Rican lifestyle and enjoy the relaxed tax laws. Although Puerto Rico is an unincorporated territory of the United States, it is considered a foreign country in terms of federal income taxes. The country, therefore, sets its own tax laws. When it comes to taxes on cryptocurrencies, this is great news. The residents of Puerto Rico pay a significantly lower territorial income tax compared to the U.S. federal income tax rate. What's more, cryptocurrencies purchased while in Puerto Rico are completely exempt from capital gains tax. So whether you pay tax depends on when you bought your crypto. If you are an American resident who purchased cryptocurrencies before moving to Puerto Rico, you'll need to comply with IRS tax rules on cryptocurrencies. However, if you acquired your cryptocurrency after establishing residency in Puerto Rico, then it is completely exempt from capital gains tax. Singapore. There's a reason why many cryptocurrency exchanges such as KuCoin and Phemex are based in Singapore. Singapore is a tax haven for cryptocurrencies, both for natural persons and companies. This is because there is no capital gains tax in Singapore, so individual investors and companies are not required to pay cryptocurrency tax. Furthermore, because cryptocurrencies are seen as intangible property from a tax perspective, when you spend cryptocurrencies on goods and services, it is seen as barter rather than payment. As a result, while goods or services can be subject to value-added tax, a coin or payment token is no longer subject to this tax. Of course, it is not possible to avoid all taxes. If you operate as a business and accept cryptocurrencies as payment, you will pay income tax on them. Similarly, if the company's core service is related to cryptocurrency trading, the company will still be liable for income tax. Other crypto-friendly countries include Germany, Belarus, El Salvador, Malaysia, Malta, the Cayman Islands, Switzerland, Georgia, and the United Arab Emirates. The greater the value of your cryptocurrency wallet, the potentially greater the tax problems, but also the greater the opportunities to solve them. As a general rule of thumb, the less developed and the more foreign investment-hungry country, the easier it is to avoid or minimize taxes. Many of these countries are also very pleasant places to live. Thailand, for instance, regularly changes its mind on crypto taxes, once mentioning a 20% tax and another time saying that there will be no taxes at all by the end of 2023. All this changes little, given that more than half of the Thai do not even have a tax identification number. So who would care about a foreigner on a long-term tourist, marriage, or business visa? If you're not a citizen of the European Union, but you would like to be able to live there legally, many countries offer a special type of visa. For example, if you invest between 280,000 and 500,000 euros in Portugal, you can apply for the so-called Golden Visa, which can be valid for a maximum of 5 years. At the end of this period, you qualify for Portuguese citizenship. By investing in the Caribbean, you can obtain citizenship of Grenada, Antigua and Barbuda, Dominica, St. Kitts and Nevis, St. Lucia, and others. The required level of investment starts from as little as $100,000. For less than $50,000, you can become a tax resident of Paraguay, where there's no tax on income generated from investments outside the country. After 3 years of being a resident, you can apply for a Paraguayan passport without necessarily living there all the time. Being a resident of the country allows you to live in Paraguay, Argentina, Brazil, Chile, and Uruguay. With another country's tax residency or passport, you can open bank accounts with the reassurance that your home country's tax authorities will not pursue you. Acting within the crypto investor community, I have met tax residents of Uruguay with bank accounts in the Caribbean and living in Indonesia. Many of them also have multiple tax residences and several passports. As you can see, the options available are only limited by your needs, your imagination, and the amount of money you have. Tax evasion is, of course, a criminal offense mentioned in numerous, if not all, legal codes. However, this does not change the fact that the so-called Panama Papers scandal a few years ago disclosed that at least 5 heads of state and many government officials, their families, friends, and associates from more than 40 countries were using similar arrangements to optimize their taxes. Dozens of celebrities such as Bono, Nicolas Cage, Pamela Anderson have also tried to evade tax payment and have suffered different consequences. Many of the 26 billionaires, including Elon Musk and Jeff Bezos, have paid only a fraction of the taxes compared to the average American. Although this is because their income comes from various investments rather than a salary like in the case of most of us. Could it be that tax optimization is only illegal or unethical when it affects us average and ordinary citizens? Now let's go over our summary. Taxation is theft purely and simply, even though it is theft on a grand and colossal scale which no acknowledged criminals could hope to match. It is a compulsory seizure of the property of the state's inhabitants or subjects. This is from Murray N. Rothbard. Several crypto investor-friendly jurisdictions include Portugal, Puerto Rico, Singapore, Germany, Belarus, El Salvador, Malaysia, Malta, the Cayman Islands, Switzerland, Georgia, and the United Arab Emirates. As a general rule of thumb, the less developed and the more foreign investment hungry a country, the easier it is to avoid tax payment or to minimize them. If you're not a citizen of the European Union, but you'd like to be able to live there legally, many countries offer a special type of visa. For example, if you invest between 280,000 and 500,000 euros in Portugal, you can apply for the so-called Golden Visa, which can be valid for a maximum of 5 years. By investing in the Caribbean, you can obtain citizenship of Grenada, Antigua, Barbuda, Dominica, St. Kitts and Nevis, St. Lucia, and others. The required level of investment starts from as little as $100,000. For less than $50,000, you can become a tax resident of Paraguay, where there's no tax on income generated by investments made outside the country. Tax evasion is, of course, a criminal offense mentioned in numerous, if not all, legal codes. However, this does not change the fact that the so-called Panama Papers scandal a few years ago revealed that at least 5 heads of state and many government officials, their families, friends, and associates from more than 40 countries were using similar arrangements to optimize their taxes.